Here we go. Pre-market. Apple. What day? 6/2/2010. How about making some money on it? And by the way, good morning. It's 6:05 a.m. Pacific Standard Time. Not only that, we're here to talk about Apple Computer and its gap. And here it is. 263.79 by 80 pennies. Let's see what they did yesterday and look at price action yesterday. And you can see the bid and ask right here. But let's move this aside. What I'm going to tell you is that we call this the SMF runaway short squeeze gap. That's what this was, meaning that once you made the top, instead of a SMF sell gap, right elbow, and pulling back, you didn't. It was one of the rare times, and we kept going. But yesterday, going into the close, you can see this long slide right off up here. This is the 265 area or whatever it is here. Okay, 265.77, somewhere in there. Now watch. They slid the bid to the closing bell. And the closing price, that's a $5 slide from here to here. And that happened on 6/1 at 13:36 time. Right here. So basically today in volatility, if you take where they slid the bid, called SMF slide the bid, get short. Below the 200-minute period moving average. So what I'm going to do is I'm going to take the price of 263.85, which I'm going to do right here, right now, just for you. I got to find it. So 263.85, where is that at? There's 70 pennies. So it's going to be right up in here. That's 264.12. The gap will happen right in here on the opening bell. Then after that, what we're going to be looking for is that was that runaway, SMF runaway short squeeze gap. So we're going to gap right up into here where yesterday's selling slid the bid right here. Oops, I'm sorry. Let me take that out. And let's make sure we have the right trend line. It'd be this handle right here. Bam. That's where they slid the later bid. And you popped up. And there was the last count on yesterday's action. Over here, this is what happened late in the day. So here, it's the gap up here. Now, what we'll be looking for is a green bar like this, or a red sell bar, like one of these kind of bars right here, something red, a bar like that. Okay. That's a 15-minute chart on Apple right here, and you can see where that price action support failed yesterday, and they spun the bid, slid the bid down here, okay? And that's how yesterday started out. And then you had that long slide the bid. So it meant people were coming out of equities. And the thing about SMF is that, hey, an equity is to buy and sell something on both sides of the market all day long. That's what we do. Welcome to the Apple chart. There's the 15-minute for people. What you're looking for is exactly what I said, is that you're going to gap up into here. We'll look and see if price action is taken out here or not. That would mean that this buyer would go and roll right through there. And if that's the case, Scotty would have some more calls based on that criteria. And he'd have to move in and pound 5 contracts right away without hesitation. And so that would address his leveraging his trade for today within volatility. But this is where the gap is, folks. And this upper area of yesterday, this is where we broke through. If you just take a look at this trend line, that's right up there, 264. They slid that bid late in the day yesterday, right off that 265.92 right over here, 265.77 pennies, like I said, and closed it out down here. So now in volatility on today, that's yesterday's close. But pre-market action is that the futures are gapping up, and so that's price action that is only relative to pre-market. That is not the buy side sell market that starts. That starts when the bell goes off. So what we teach you at SMF is about artificial price action. Artificial price action would be confirmed with that gap up into there, that there's an immediate red bar and a SMF 369 reversal. Either that's going to happen and or price action is made and the public is going to run in and you have to buy the breakout on the spot. Thank you.